trend trader strategy, right? You hit that in and it adds it to your chart. My thing is, that's just another, I want to see the trend on the overall market. All right. Which is that blue line. You can make it thicker if you want, you change the thickness and go into the settings. You can change it to make it bigger or whatever it is. That's on you. All right. So that is kind of, one of the things I want to show you on the swing trading using leverage. So, if I did 300, at 20x 3 times, I'm trading with 6,000 for $300. All right. So that is how we use leverage. That's how I use it. That's why when I say I'm up 300% or 200%, or I'll be up 500%. Right. And now, of course, I can do it with bigger money, right? Like at the end of the month, I'll be doing it with 1,000, 2,000, 10 at 20x. Now you're trading with 20, 40,000, right? Where my max loss is 1,000 or 2, but I'm already up 1,000, 2,000. So really now I'm not really losing anything. I've already made the 1,000, 2,000. Now I use that back and now 10, 20x in a bullish period. That is why, we love the bullish market, because it allows you to print the funds, right? And it allows you to protect your downside. All right. Well, hopefully, you guys quiet because it sounds good, maybe.
Just soaking it up, man.
All right. Well, I'm gonna let Darrell take it back over. I don't have a lot to share, but I'm gonna share those strategies and the hedges. Some of the things that Darrell's talking about with the GBUSD and the dollar, you can take 2 trades, right? You can take opposite trade and you can put a stop and one will keep running. So, it's like roulette. I don't know if you guys, we're gonna have to have a casino day, but I go to the roulette table, and as long as you have a bankroll, I play every number. And some numbers, it feels good winning. Sometimes you're sitting there and you're losing and you're winning, but then you'll go on a streak where you hit 5 in a row of something you have $5 or $10 on, and then at the end of the day you're up, right? And so that's kind of how trading is that sometimes you break even, sometimes you stop out, but the more you're in the market, the more you're actually protecting your downside. Which when you play every number on a roulette, it's 37 numbers, and when it hits 0, you screw. But I even play those numbers, and that turns the odds against you. But on some of the numbers I'm hitting 4 and 5 when I have 1 and 2 on the most of them. So even that roulette, I'll spend about $150 to $200 a hand, but the winnings, be 700, 1,000, and then when I'm breaking even, it's like, maybe I'm breaking even where I'm winning at 100 and I'm down at 50, or I'm down at 75, right? But the ones I win on, it's like I'm tripling up. And so some of that is just being able to see it and then experience it, that, hey, you know what? I'm protecting my downside. I'm not going to get liquidated. And I have enough money that I can go smaller in where I can cover all the downside. It has to make a brand new low. And the chance of that happening, that's where you have to say, hey, if AVAX is gonna get down to 15, yeah, I just lost $300-400. All right, somebody is on speaker, so I'm gonna all right, cool. We have any questions on that?
I don't think so, man.
Is that easy, or did I make it difficult?
It was a lot, but I think for the most part, I got it.
All right. So I want to hear somebody that didn't get it, because I want to be able to kind of walk you through. And that this is where the learning comes in, where everybody can be like, oh man, well, here's where I didn't get. And so if you're saying that, hey, it was a lot, I want to know where it was at that was difficult, because all I did was I leveraged 3 trades at $100, and I protected my downside. Right. That's all I was doing. I was getting in the trade now while I was moving up. The 100x leverage, $100, it allowed me to trade with 2,000. Right. It allows you to trade with 2,000. I only had $1,000 in the account. I used 20x leverage And then I says, hey, where's my liquidation? Oh, is that 1688? Right? As it goes up, my liquidation goes up. But I put it at, then I put the second order in, a limit order to cover the liquidation price. Right? So now it can go down. If it liquidates, I just buy more time.
That makes a lot of sense. That makes total sense.
Right? And so now even at 1695, my liquidation is at 1627. Well, 1627, 1621 was the 7-day low. So now I'm actually even covering, I buy another $100, 1621, put another 20x on it. And now my leverage goes down to under 15. So it has to make a 7-day low in the next, for me to get liquidated, and I only lose 300. But now I'm trading with 6,000. That's how I swing.
So your benefit to doing that is you're able to get in a higher dollar amount, more leverage, as opposed to, say, an example, where you would just adjust your margin.
Where people get messed up on leverage is they get liquidated because they have to be right. And sometimes it wicks down and it takes them out. Well, here I got orders protecting that wick, buying me more downside. So instead of me paying, trading with 500 straight up, right, where I can lose 500, now I'm trading with 100 and I'm leveraging it down, where now I'm using 20x leverage where I'm protecting my downside though. So I have $1,000 and I can say, you know what, this has to go down to $10, $11 for me to lose money. So I'm still leveraging down.
So would you say your dollar cost averaging into your trade each time? With increased leverage?
No, I had to increase it. I just want to protect my stop out. So I can put it down. I don't have to use more. I can use the same amount, or I can lower it. And if I lower it, it gives me more room. So now if I go down to 10x, right? And now I'm still trading with what I initially had, but now my leverage goes down to 1547. So it's gonna have to go down even further if I lower it. So now it just buys me more time. So in a month where I'm thinking that, hey, market's gonna go up, I'm just taking leverage trades and I ain't got to worry about losing my whole account or getting liquidated because I'm trading with a small amount. But now instead of me putting 6 grand in the market, I'm putting 400 in the market. All right. Now in futures, I got to trade with a higher account. I got a $25,000 account. On crypto, I can go load 1,000 in and I can flip it to 4,000 or 5,000. So this is what I mean by being your own bank and using leverage in DeFi. You can do it other ways and guys are tying it up, but I'm like, I want to protect my downside. I'm not going to put 6,000 or 10,000 on a platform and be like, hope it don't go out of business. I'm going to put 100 or 200 on this platform and do 10x. And now I know the most I can lose is 200 or 300. I can stay in the game losing 200 or 300. Or if I want to, if I want to go big and I say, you know what, I want to make a lot of money this month, I'm gonna go ahead and use a 10x leverage on 10,000. And now this has to go down to 14 or $15 and it gives me the upside. So now I'm trading with 100,000 with a $10,000 account.